Hi there, this is Lynne Coverdale, your mortgage loan expert with Centra Credit Union. And in this video, I'm going to cover some things that are important to do around the time that you're looking at buying a home. First, get pre-qualified or pre-approved. That is where you make application with the lender and you share information about your income, where you work, you allow credit report to be pulled on you from all three of the bureaus, and you also share information about what money you're going to use for down payment or plan on saving for down payment, etc. Really a good idea. I'd almost say required, because you're going to want to make an offer when you find the right home with a letter that says you've gone to a lender and you've done this due diligence process. So that's the most important to do, I would say. Checking your credit. That is part of the pre-qualification or pre-approval process, but you can do that yourself by going to annualcreditreport.com and pulling a credit report from each of the three bureaus through that annualcreditreport.com site. The three bureaus are TransUnion, Equifax, and Experian. Other important things to do around the time that you're looking at buying a home. Make sure you're making your payments on time. I'm sure you do, but you just want to make sure that there aren't going to be any late payments on your credit report, ideally in the last year, ideally forever. But I know life happens, so ideally in the last year is a really important time frame for making sure all your payments are made on time for all those items reported to the credit bureau. And as far as credit cards or credit limits, they have changed that over the years. Sometimes they used to say no more than 50% of the line amount. Now they're down to 30 to 35% of the line amount. Being at or below that is ideal for optimizing your credit score. So if you have a $1,000 credit limit, ideally being at 30% of that, or $300 in that example, or lower, that's a nice sweet spot for maximizing your credit report. Other things to do that are not related to credit would be saving money. So as far as down payment, talking to the lender during that pre-approval, pre-qualification stage, they can talk through loan programs with you so you know how much you'll need to save if you are in the process of saving that, set aside, or maybe from a family member, get a gift, etc. It's very important so that you know what to save and what money you're going to need for that home purchase. And then let's say there's some large deposits that are going on. You want to document those. Let's say you got an inheritance. Lenders need things paper trail because they need to understand where funds are coming from. You need to understand the file, the contents of the file, credit, income, assets. So let's say you got an inheritance and you put that into a bank account. Well, in that case, you'd want to document, paper trail, support the funds coming in from the source, so paper trail that, and then the funds going into the account and what the source was, so that when you go to the lender, they can say, or when they do ask you what it was the source of that, you can give them proof of, well, this is an inheritance, this is what happened, look at the money, here's where it came from, and I deposited it into this account. Other things to keep in mind, you don't want to close out accounts during the time on your credit report, during the time that you're looking at buying a home. There's been a lot of myths about that, a lot of back and forth about maybe you should just close out and clean everything up and close out accounts that you're not using. Please do not do that. The biggest impacts as far as going into your credit score are your payment history and also available credit. So if you have $5,000 credit limit on an account that has 10 years of history, paid flawlessly, and you decide, I'm going to just close that account out, you've just shut down the history for that account. It's no longer available in the calculation. In addition, the available credit for that, let's say $10,000 line amount, that's no longer able to be calculated in the total available credit. So it's just not a good idea to do that around the time that you're thinking about buying a home. And then not a good time to be applying for new credit. Some people are like, well, I think I'll go get that new car for that new garage I'm trying to buy when I buy this new home. Not the best time to make new purchases. Kind of keep everything status quo ideally. Payments on time, 30% or lower usage, not closing out accounts, and not trying to get other loans or other credit cards. Those are the best things to do and not do around the time that you're looking at buying a home. Thank you for your time. I look forward to working with you, and I'm here for you whenever you have questions. These are topics I like to share because you don't know what you don't know. So that's why I like to share it with you. Thank you so much. Make it a great day.